Well, in case you missed it this morning, USDA came out with their weekly export sales numbers, and we have them for you. The corn number was kind of paltry. They wondered how much we would have, and of course, we really haven't had much in the way of overnight export sales lately. And the total last week was 417,000 tons. Well, that compares to a range of estimates that ran from 400 to 1.1 million tons. So okay, it was in there, but it was right at the low end of the trade guesses. Soybeans came in at 379,600 tons. The range of guesses ran from 200 to 600,000, so it was in there, but in the lower half of guesses. In the wheat, 614,000 tons. Now, on the other hand, they were looking for 100 to 600,000. It actually exceeded expectations a little bit on the wheat side, so that was a net positive. However, boy, looking at the markets, and they kind of tripped and fell right out of the gate this morning, but then they rebounded, they got their footing, and here we go with a look at our quotes provided by Bar Chart. Okay, we have July corn 16.5 cents higher at 6.23 on the high of the day right now. December corn, new crop corn, 5.43, whoops, 5.44 and a quarter as it continues to climb. It's making another new high here. We're 7 3/4 higher on the day. Nearbys outrunning the deferred contracts by about 2 to 1 here. In fact, even a little more than that. July up 16, December up 7. Soybean trade, well, soybeans are off and running. Here they go. July 33 higher now at 15.12.5, almost on the high of the day, after a low of 14.80 this morning. They're off of that by 32 cents now already. November up 26 at 13.36 and a quarter. In the wheat market in Chicago, we go to July and it's trading 12 3/4 higher. We're at 6.87 3/4. Kansas City on the July contract is now trading 16 higher. We're at 6.53 3/4 right now. Spring wheat trade in Minneapolis has July 15 cents higher. Oh, there it is, $7.25 on that July contract. Let's go to Ted Seifried of Zaner Ag Hedge in Chicago. Wow, that's some mighty market action going on in the grain trade here today. Was that unexpected? Do you think there's a fear that producers who need to do some hedging are getting too complacent?
You know, I'm getting calls every day, Marlon, about, hey, should I be selling some corn and selling some beans here? And the answer to that is actually kind of yes. I mean, I don't think you should be going from zero to hero, but, reward the rally that we're having in the market. Now, the strength that we're seeing today, it's not really coming from export sales. Export sales came in well within the lines of expectations, and in some cases were maybe just a little bit disappointing. What this is this is a technical breakout to the upside that the funds are really jumping in on, and they are catching up on soybeans, and they've got a lot of room with the expanded position limits now in corn. And it's a South American weather deal. Until it rains in Brazil, until we're not worried about that South American production number continuing to come down for corn, there's going to be this buying interest, it seems. And so, yeah, it's been very, very impressive. But if you look at the open, I mean, we had volatility in corn in the first 5 minutes of about a 10-cent range, and it was chopping at about 4 cents a tick. It was just kind of wild. And so a lot of times this volatility may be kind of signaling sort of the end, that we've gotten very overbought in a short period of time. And when I say the end, I don't mean the end of a rally. I think longer term, we've still got a whole growing season to get excited about a lot of things. But we've rallied about $1 since the beginning of this month in corn. And at some point, we could be due for a bit of a bigger pullback, a bigger correction. But at the moment, the trade is very frothy and looking for those buying opportunities. Your technical traders are buying this breakout. And, it's not something where we need a whole lot of positive news every day. We just need to avoid a wetter South American forecast in order for prices to go higher, it seems.
Yeah, I'm glad you brought that up, and it is something that does bear consideration. When you talked about a retracement, when you make such a huge move all at one time like that, then the retracement patterns, percentage-wise, that leads to a much bigger correction. And just something to watch out for. At some point, it'll happen. We just don't know when. And keep your ducks in a row, as they say. Ted, we'll pause for a break right here. We'll come back and we'll look at the livestock market action, to the export sales numbers, and the big move in grains today when we come back. And we're back with Ted Seifried of Zaner Ag Hedge in Chicago, and we're going to take a look at our livestock quotes. Now, remember, we just took a look at the grain, and we're making new contract highs just everywhere but KC wheat today in the grains. What is the livestock trade doing? Let's start with live cattle and our futures provided by bar chart. And right now it is lower, but maybe not as much as you would think. Oddly enough, you have June live cattle actually hanging in there at 116.75 per hundredweight. That's only down 50 cents. I mean, yeah, it's down, but considering the pressure, it seems like it's hanging right in there. August now down 57 cents at 117.40 per hundredweight. Now, if you get to the feeder cattle trade, that would have a lot more exposure to the bottom line when it comes to the feed input costs. And here you have the May feeders. They're down $1.20 right now at 138.40. But, you know, you consider it has a $5 trading range. It's hanging right in there. August is down $1.62 at 150.30. Then you get to the lean hog market. Well, lean hogs have had some big moves recently, and they're going higher today. June is up 90 cents at 105.42, and you have July up 80 cents at 103.80. Let's go back to Ted Seifried of Zaner Ag Hedge. Ted, I noticed yesterday we had a little bit of weakness in the cash cattle market. Looks like 119 to 120 yesterday, but the wholesale beef trade, the beef cutout values were higher yet again, and it seems to be helping to support this overall cattle futures market. We had the choice cuts $2.30 higher yesterday. Is that big of a factor?
Yeah, absolutely, Marlon. I mean, when you see these cutout values really advancing like they are right now, it really gives us a good feeling that domestic demand is really still very, very good, even at higher prices. And so you look at the cash trade that we saw, and while it was a little bit softer, I mean, it's still trading upwards of that 120 level, which is a lot better than the 116s that we had been seeing a few weeks ago. And put that together with the higher beef cutouts, and that gives us reason to believe that there is room for that cash to continue to go higher. So, yeah, we are down today, but on a day where you've got corn really flirting with the idea of going limit up, it's kind of amazing that we're not down more than we are. And we are still holding on to some very key technical support levels in, say, the August live cattle contract. The June's below it, but it doesn't seem to have a lot of enthusiasm about really extending past that, at least not so far yet today. So this is going to be one we got to watch very closely between now and the end of the day. And obviously we have the cattle on feed report here tomorrow, which we have some very bearish expectations for. That comes out after the close tomorrow. I wonder if even if that report does come out near expectations, what, 134% placed on feed year over year, the market realizes that this time last year was a very different world, and that, you know, placements were really affected by what was going on at the time. So yes, let's get the bearish report out of the way. I think it will likely be bearish, but we might actually rally on that, holding support, and just the idea that inflation is kind of spreading throughout, even with higher corn prices. Maybe we can support higher beef prices and therefore higher cash cattle prices as well.
Well, now that is an interesting point. Thank you, Ted, for bringing that up. Excellent points all around. Ted Seifried of Zaner Ag Hedge with us here this morning. Exciting markets today. Janet, I'll turn it back to you.